beautiful people. We are broadcasting live. Today, we're going to talk about options flow and how to navigate options flow data. Okay. So let me pull up Barchart really quick. This is the website I use for options flow data. Let me share my screen really quick. Let's see here. Share. So if you're here, we're going to cover some options flow data. I'm going to show y'all a couple strategies to use when looking through options flow as well. Let me pull this up really quick. Now I'm going to pull the chat in the side here so that I can keep up with any questions you all might have. So welcome. As always, if you have any questions, drop them in the chat. I'll get to them. All right, let's go over. Let me turn my stuff on Do Not Disturb. All right, let's go over options flow data. Now, if you're on Barchart, you can come here. When you're on the home page as well, like if you click options from the home page, you do have an overview page here where you'll see the most active options. Now, this is where I say you should usually start, okay? Because first, I want to know what are traders trading, right? Where's the most volume in options trading? Now, so when you're taking a look at this, you'll see it's in options volume. Now, this isn't in volume of shares traded. This is in option contracts traded. So you can see that the most option contracts are being traded in these particular names. Okay. Now, you can screen for what you're looking for in particular. Okay. And you can set different parameters. Let's say you're looking for a certain volume, right? Or maybe you're looking in a maybe even like what it used to be an average volume. Let's say average volume. You can add these different types of criteria. Let's say 20-day average volume. And then you can pull that up and you can screen these particular names and they'll come up as a filter here. So we'll see that the highest volume is coming in these particular stocks, right? And so you can use these screeners to find different things that you're looking for. You can also use options screeners to do this as well. So if you're looking for a particular options contract, you can use this to filter through whatever you need. Now, when you click on options flow, it's going to put it in the order of premiums. Now, that's going to be the total size of this particular trade. So you can see the biggest trades. These are going to be institutional level trades. And you're going to also get a lot of the data that you're going to see in terms of what is it? Is it a call or a put? What is the strike price? Expirations in terms of like, when is this even going to expire? Is this something that they're expecting to, happen this week? Or is it something they're expecting to happen within a couple months? Or maybe they're buying leaps for next year. Okay, so you can see that here. This is leaps for next year. So it looks like this person is trading calls with a low open interest and a high volume. Now, volume is another great indicator because volume is going to tell us what's, where people trading at. But when you compare that to the open interest, let's say we have a low open interest in this case and a high volume. If we can see the open interest increase, that means that people are actively opening positions in this, say, Oracle call. Now, none of this is financial advice in these videos. This is just, we're going over options flow data, okay? Now, when we're going through this, let's say we want to look at these particular charts. So we can see they're trading calls here, they're trading puts there. You can even, when you click on the flip charts, you can go and look at the strike, the option strike price chart, right? So you can see the price movement of the chart. So you can see, hey, is this option already on the run or is this option just getting started? So you can look at the charts here, but I like to also see the underlying chart for the underlying asset. So I can see, okay, hey, they're trading. We saw that they were trading calls on booking. You can also set up your own templates. So let's add, Barchart has preset templates here. Let's look at RSI moving averages, okay? So we can see here that, they're trading calls on bookings, which has, obviously been stellar for them. They were trading puts on this ticker, Vistra Energy. So I guess they're looking for this RSI to kind of turn down. Maybe they're looking for, is this the 50 here? So they're assuming that this death cross could be bearish here. So you have the black line here, which is your 200. And then you have the green line, which is your 50. So this crossing is essentially what they call the death cross. So somebody's expecting Vistra Energy to fall lower based on what it's doing with its moving averages. Now, I don't know that for sure, but that's the assumption that we can make. Now, they were trading calls on Oracle. So they're expecting this maybe to reclaim here. So if we look at price action in the past, we can see here that at the level that it's at, we can see we had a lot of support here, got a little bit of resistance, used it as a platform to create a gap. Now that gap closed here and came right off of this line. Okay, so we can see here that let's actually take a look at what contract they're trading. 165 strike. Okay, so if we go back to the charts for the underlying assets and we go back to Oracle, and let's put back on their template. Let's say I'll set this as a default. I can actually save it as a chart template as well and edit it as needed. Now, if we take a look at what we put on here on our price levels for last time, and they're trying to trade a 165, so they're expecting price to move here, okay, back to this level here. So they've seen it happen once before, and they're like, hey, if we can get some momentum here, maybe we can get a little breakout trade to trade closer towards that. Now they're quite out of the money. So they could maybe hit a target at 152, maybe take some profits, but they're buying out of the money for this particular contract with a target of 165, essentially based on the strike. Okay, so that's one way that you can find trades. Now, one of the things that I noted about this trade was that its open interest was low, but its volume was high. So that's telling me something's going on, right? There wasn't a lot of volume there, but now there is. Now, unusual options activity is essentially that, right? We're looking for volume in comparison to open interest, okay? So when you're looking at that, you can see that the open interest on this side is very low for these, okay? But the volume is quite high. So what's going on here? Right. And like I said, you can either look at the flip charts for the option strike to see where that falls on the chart. Like, hey, is this a premium that's still low and I could be catching a trend based on the volume? Or is this something that's already run up and maybe it's too late, right? Because you don't ever want to chase option premiums. You definitely want to always allow the price to come back to you. Okay. So with that being said, this unusual options activity is a great way to find trades where they could be building positions, right? Now, one thing that I noted about it is if these are low, you can see this Oracle call that we talked about is also coming up here as well. Now, you can see sometimes they could be trading these, they could be selling some of these positions as well. So you'll see that bearish sentiment is going to be in red and bullish is going to be in green. So you can kind of spot like, hey, this is a bullish trade for SMCI at 33.50 call. So we'll pull up the chart, SMCI 33.50. We'll put that on here. Where's SMCI? And we'll put that on here. 33.50 is the strike price. So they're expecting price to be here. Okay. So, and it just had a gap down. So they're expecting maybe this gap to close here. So they're taking a bullish trade on this particular stock. And you can see that there's an increase in volume here. And that's what we're seeing on the option side as well. So maybe traders are, expecting that this could potentially, this magnet, this gap that we've talked about before on other videos, could potentially pull price back to this level. So these are ways that you can find trades. But like I said, when you're looking at the open interest in comparison to the volume, one thing that you want to, maybe you want to watch these as well. So if you screen them, so if you click screen and you add any different type of filters you want here, you can also save this as a watch list. So if you want to watch these particular trades, you can go in and set these screeners and save them or save them as a watch list. Okay. Now, when we talk about the change in open interest, if the open interest is low and the volume is high, the only way I know that people are now creating a new position is if the open interest has now increased. Okay. So with that being said, this is where you find out where that's happening. Okay. The options change in open interest. Okay. Now you can see increases and decreases. So I can see, okay, there's been an increase in, 65,000 contracts for this put on SoFi. Okay. And this is for June. Okay. So you'll see the days to expiration. So you can see these larger dates. Maybe they're, looking for some larger move in the future. Okay. But you can see that there's an increase in these particular positions. All right. So you can see here, SoFi puts, looks like a strike price of 12. So if we look at the flip charts for these underlying assets, They're buying puts on SoFi, and you can see here we have a gap. So that could potentially push momentum lower. So traders are saying, hey, we're buying puts on SoFi, and they bought the 12 strike, and it already hit that as a low here. So they're essentially saying from where we are now, we want price to hit this level. And they feel like, hey, maybe SoFi won't get support until 11, right? Now, this is another great way to find trades when looking at options flow data. Okay. Now there's a lot of different ways that you can look at this. I could keep going on with different ways, but that's a strategy that I use. Now there's also screeners on here for different strategies. So if you're looking for long calls or anything like that, there are different screeners that you can use to pull these up. So if you're looking for vertical spreads or different straddles, or maybe you're just doing long calls or long puts, you can come in here and get a screener for these. Okay. So it'll pull up these trades based on what you're looking for. And like I said, you can continue to screen them and adjust whatever you're looking for, right? Maybe you're looking for a certain delta. You can add delta on here. So that way, if you're looking to make a certain amount of money per point that it moves, you can put in those types of criteria. And like I said, you can save this, and whatever filters it gives you, you can then save it as a watch list as well. Now, one thing I want to show you to kind of close this out is let's actually take a look how to, I guess, find out what traders are trading. Once you find that trade, let's say we go to our most active options list. Okay, so we go here to our most active options, and we see that a lot of traders are trading NVIDIA and Tesla. Okay, now the put call ratio is something that I use, but this is going to be based on the volume. So this is telling us just one side of the story. So today, traders are quite split on NVIDIA. So it's a little bit of 50-50, right? It's a 1-to-1 ratio. It's just as many puts as there are calls, right? But let's take a look at Tesla, because we can see the calls seem to be a little heavier on this. So it seems like maybe traders are a little more bullish on this. And we saw that options trade on SMCI, and it looks like traders are quite bullish here as well. So we can always, maybe you're looking for a particular setup, you can pull up the flip charts, like I said, and pull up the charts here, and you can change any type of, like for me, I have the put call ratio here on the chart as well. So this is a screener or a setup that I use on my chart template. So let's say we're looking at Tesla. All right. So you want to figure out, hey, what are traders trading? Are they trading puts? Are they trading calls? Now, based on the chart, looks like we've run into a little resistance here at our 200-day. Okay. So 291 here seems to be giving us quite a bit of resistance, maybe 292. Okay. Now we've created a gap up here before. And then it looks like we have some resistance in the past here at 270, right? So we're sort of wedged in sort of this price range here, but what are traders trading? So what we can do is we can click on Tesla, and we can do a couple things here. All right. So if I'm looking for a particular trade on long calls or puts, I can come here and find it here. But how do you know what expiration to pick? Okay. Now, this is a lot of questions that I get, is what expiration to pick. I usually go to the put call ratio to find that out. Right. So one thing we know is that a lot of people are trading calls today. Right. So when we look at this, this is the put call ratio side by side. If we look at volume, we can see that a lot of traders are trading more calls than puts. Okay. Now, if we put the open interest, we can see that a lot of traders are holding puts though. So they've been building these positions into puts and holding them. Okay. But right now, for the most part, they seem to be trading a lot of calls. Now, what does this mean? All right. Now, when price is high, you can see a lot more people want to trade puts against that. So you'll see an increase in that. But this changes as price happens, because the put call ratio for volume is going to change constantly, right? It's going to be maybe they're bullish on earnings or something coming up, or maybe they're bearish on earnings, right? But you can see that as price falls, they seem to be trading more puts, right? Because I'm bearish, excuse me. They're bearish on whatever this action is. And they're like, hey, we want to trade as many puts as we can to profit off of this. But as soon as Tesla starts to make its way back, you can see that this put call ratio starts to fall in volume, right? Now, volume is, like I said, it's going to be something that changes all the time. It's going to tell you what are people trading, but open interest is going to tell me what are people holding. So you're going to see something, a little more steadiness in the open interest of this because it's got like I said, that change in open interest tells us a lot. Like, are people holding this position? Are they confident in this? So you can see as price increases, more people are willing to hold puts. But as price decreases, less people are trying to hold puts, right? Because I need to be taking profits on that. While the trading volume for puts may be high, the open interest may be lower because they're like, okay, the price move has gone down. I need to hold less of these. And then as price starts to make its way back up, maybe they're thinking tariffs are still going to be a problem. We want to be bearish. We'll build our positions again. So you can kind of see what traders are trading by volume and open interest. Now, where is it though? Where is that volume and where is that open interest? You can click here on volume graph so you can visualize it. And we can see that there's a large amount of volume right here on our monthlies. So I always tell people to stay away from these W's, the weeklies, because some people be like, man, I bought a contract and it went in the right direction, but I lost money. It's because the volume wasn't there, right? You're at where people aren't trading or even holding contracts. So you essentially have nobody to sell to. So you're going to lose money. So you can see that the monthlies seem to hold a lot more open interest and volume. Okay. So if we're looking at maybe buying a little more time, we look at the June contracts here, and we can see for the most part, they're trading call volume. And on the put side, it's sort of split, right? There, it's 1-to-1, right? It's 621,000 calls, it's 628,000 puts. There's a little more puts than there are calls, but at the end of the day, they're neck and neck. All right. Now on the call side, they seem to be trading more on the call side. So what we want to do is see if this volume in calls will turn into a lower put call ratio to say that more people are starting to hold calls and less people are holding puts. But if you want to look at contracts, you can come here and look at this particular date. And let's say we look at the 620 contracts. We can then say, what are the price targets in that particular range? You can come over to expected move and say that, well, what are option traders trading for the 650? And we'll see the range here. So if you look to the left here on the chart, like I have my mouse here, but the price is going to come up here. So on the 620 strike, looks like the upper range is 325, the lower range is 234. Okay, so depending on whether you want to be bullish or bearish, you can have these price ranges that are created based off of these option strike prices. So that's one way to look at the expiration date. And then this is another way to determine, well, what type of strike do I want within this particular range? Okay, so I hope that helps. If y'all have any questions, make sure you drop them in the chat. But that's it. That's how you find trades. Once you sort of get your expiration date, like I said, use these price range to determine what is the strike that I want to buy. And also too, if you're looking at these particular stocks, like I said, you can come here and say, all right, we want to trade the 620, right? And this is pulling the options flow data, and I can see, hey, where's the most volume for the 620? We can see it's a 300 strike. Or where's the most open interest? And in this case, the most people are holding still the 300 strike. People are trying to essentially say that, hey, Tesla is going to reach that 300 target, right? So there's more volume and open interest in the 320 or 300 strike price on the June 20 expirations. Okay, so hope that helps you. And if you want to be on the put side, let's say you're bearish, you can also do it over here as well and see, hey, where's the volume here? You can see they're going for 270. On the open interest side, they're going for, looks like they're holding 300 puts. So these are people that are still holding. These are people that are making money on Tesla not going to 300, essentially. And then next to that, they look like they're holding the 270, which is a little more out of the money. Okay. So hope this helps. Like you can also look at the profit loss. So right, the premiums will be right here on the page. But if you look here at the profit loss, like if Tesla's price falls below here, you'll profit. If Tesla's price falls below here, you can only lose what the premium is. Okay, so if let's say we're going on the call side, you can say, hey, I want to look at the 620 and I want to take this trade, right? Well, if Tesla falls, right, the premium here, let's look at the premiums. And we'll have the delta here as well. You can see this one is 1850 on the ask. So we can see here, if we go down on this trade, the most we can lose is this 1850 that we paid for this particular premium. Okay, so when you're doing these long calls and long puts, you can only lose as much as you put in, but the gains can be unlimited. Okay, so as Tesla price breaks over that 300, we'll then begin to break into profits for this particular trade. So you'll see the Greeks here. You'll be able to see the expected move that we talked about earlier as well. And then some extra things like volatility, trend, a whole bunch of stuff. It'll tell you, hey, what is it looking like short term? What is it looking like long term? These are some type of things that you can look at to sort of find what you're looking for in particular. And then understand the risk and reward when you look at the profit loss. Like, hey, you have this to lose, but you have this to gain if Tesla's price hits a particular target that you have in mind, and determine if this trade is worth your time and the risk. All right. I hope that helps y'all, man. As always, allow price to come to you, especially with these option premiums. So if you see that a premium price is $6 and you want to enter that trade, maybe set a limit order for the premium to be more at $5, especially if it has a lot of volatility or maybe a large spread in the bid and the ask. That way you know, sort of protect yourself from some of the volatility that might come in options trading. So always think to set lower prices on your limit orders and let the price come to you, especially in times of volatility. All right. Hope this video helped you all. If you have any questions, make sure you drop them in the comments. Make sure you share this video, like it. I'm doing this for free. I'm doing this to support you all, help you all out. So if you have any questions, let me know. If you want any other topics to be covered, drop them in the chat and I got you. And if you want a free trial to Barchart to access a lot of this options data, because some of this can be more of the premier access. If you want a 30-day free trial, I'll drop the link in the description. All right. I'll see y'all for the next one. Holla.